Hi, everyone. It's Jerry with Teachers Retirement. We're going to go ahead and get started. Thank you so much for joining us today. Today's topic is I've completed drop. What's next? So let's talk a little bit about what we're going to be talking about. Some of you may be in drop. Some of you may be working after drop. Some of you may be here, I want to learn more about drop. A few friendly reminders for all of our webinars. This is general information. All of our information can be found at trsl.org. Everyone except myself and my colleague Cliff will be muted. If you have a question, just type it in the Q&A box and we will answer questions either during the webinar, Cliff will type in responses, or I'll answer it at the end of the webinar in about 20 to 30 minutes. This webinar is being recorded, so you can play it back later. Our recordings in PDF are available online, and this is the link where that's going to be at. We will email everyone the link tomorrow, and please check out our YouTube page. Now, a little bit about our questions today. Questions today are for a general group, as far as not things that we can look up or things that you would need to see as far as what you need to find out about when is your drop window, what's your drop amount going to be. Those types of things we would need to look you up. So you would reach out to us at Ask TRSL directly for those things. So my colleague Cliff Horn is on the other side of the screen. If you want to say hello to everybody, Cliff.
Hey, everybody. Looking forward to this workshop. Again, if you have questions, drop them in our chat box, in the Q&A. I'll be dropping some helpful hints and some links to other things in the chat box for you.
So today's agenda, we'll talk about what happens during drop and what are your options after drop participation. There's also an after drop supplement if you choose to work after drop. What forms do you need to retire? Options with your drop account, withdrawal options and examples, and we will talk about your tax liabilities in general. So some of you listening, maybe you're here to learn more about drop, maybe you're currently in your drop participation period, or maybe you're working after drop. When you're working in drop, keep in mind the retirement option that you chose when you locked in your choices going into drop, not your contributions. What would have been your retirement check is what you chose, and that determines what's deposited into your account. That option chosen is a permanent choice. So when you actually end drop participation or you exit drop and retire, whenever you actually get home to retire, you're going to not choose another option. So you don't get to choose, hey, I chose maximum, now I'd like 2A. That's already an official decision that you made. That was when you notarized your affidavit and got it back to us. And that's what determined what your drop account was going to be. Not your contributions, which you may have noticed were in your paycheck because we weren't deducting those out each month. While in drop, what is the same? You continue to work and draw salary, you earn and use leave, you're still eligible for raises and promotions. All of that seems to be normal. You can change jobs or employers. You just don't want to have a break in service. That's a type of break that everyone else does not have. What is different while in drop? Well, I'll tell you first, it's not on here. You're different, right? You feel, I can do this. Another very big difference, and this is key, is neither you nor your employer makes contributions to TRSL. So we're not taking 8% out for your retirement every month. That is going to be in your paycheck, which means your paycheck goes up a bit. You can save that, spend that, it's completely up to you. But because of that, I call this the swap for drop. No service credit is earned while you're on drop. So you're swapping one opportunity for another. Instead of earning service credit to increase your future retirement benefit, you are saving what would have been your retirement check into a drop account. You're swapping one for another. Your salary is not reported to us while you're in drop, so we don't know if your salary goes up or down. And a note back to the first one, let's say you enter drop at 30 years of service, you work 3 years, and then you retire. You're still at 33 years of service. You're still at 30 years of service. You're not at 33 years. You physically worked 33 years, but that's not what your service credit would be at for TRSL purposes. Your retirement benefit is frozen. The option that you chose determined what was deposited into your account monthly, and how long you stayed in drop determine how much would be deposited into your account. Your options after drop participation. Well, you certainly can retire. If you retire, you start accepting that first of the month check, and you're able to access your drop account with a variety of ways to make those withdrawals. But if you continue to work, you're not able to touch that drop account. So your drop deposits end, you start to earn a supplemental benefit. We'll speak upon that in a moment, which will be added to your future benefit when you retire. And we resume taking that 8% back out. So now we're going to switch back over. So now you're going to be increasing your retirement check with that 8% contribution, and we'll discuss that shortly. Working after drop. This looks like the formula going into drop. It's our number of years that we've worked times our benefit factor of 2 or 2.5% that we went into drop with, times our final average compensation. Now, that may be based on our years before drop, if it's less than 3 we've worked after drop, or if we've worked more than 3 years after drop, that may be a new higher or lower average compensation just to calculate the years after drop. Just so we're clear, any amount of time that you work after drop, it can be calculated for an after drop supplement to increase your monthly benefit. That would be your first of the month check, not your drop account. So keep that in mind, that even if you've received an increase in pay, we're not recalculating those 25, 30 years going into drop. It's just your time after drop that may be impacted in a way if you have a higher salary. So working after drop, upon retirement, anything after drop can count. So we're not talking, oh, you have to work a certain number of years. You might work 4 months, you might work a year, you might work 5 years. Any amount of time can calculate a higher benefit after drop. So think of it like this, and I'm a little ahead of my slides. I like to use analogies. Think of TerraCell as a produce stand, okay? The fruits are your first of the month retirement check that you receive for the rest of your life, no matter what. The fruits of your labor. Your vegetables are going to be your drop account. You're going to spread that out over time, or you're going to run through it quickly, depending on how you eat your vegetables. And it's going to at some point zero out. That's not necessarily going to last you the rest of your life. But your first of the month check, your fruits, that is a lifetime benefit. So our after drop supplement, the amount that we earn if we work after drop. Let's say I work a year after drop. Well, they're going to calculate the average compensation based on my time going into drop, okay? If I work 3 years after drop, 4 years, 5 years, they will calculate it on a higher average after drop, just that time after drop. Again, not those years going into drop. So keep in mind, those are 2 different scenarios. This is an example of someone, this is just a random person we did an example of, showing you that if you find yourself, friends, if you're working after drop, you want to know, what is my value? If every year I work after drop, is that going to be $94 a month? Or every year after drop, is that $56 a month or $110 a month? What about 3 years after drop? For this person, it's $300. Maybe for you, it might be $225 for working 3 years after drop. Maybe it might be $410. You need to find out by reaching out to TRSL, what is my value if I work after drop? You can request a benefit estimate with a Form 10. And I'll remind you about that a little bit later. Form 10, if you're currently working in drop and you want to say, hey, what does it look like if I work a year or maybe 2 after drop? Some of you are ready to apply for retirement. So you might be in drop or have worked after drop and you're ready to apply for retirement. Well, if you've participated in drop, you'll fill out the Form 11H, a Form 15D, and the IRS form. But if you're on the front end going into drop, not actually going home to retire, then you'll just fill out the Form 11 at this time. You can apply through Member Access, whether it's to participate in drop or it's to retire after drop. Either way, you can do this particular form online. And within 2 weeks of our office receiving that form, we're going to send you an acknowledgement in the mail, your US mailbox. That way you'll know, okay, good, they received this. Or within a couple weeks, just check with us if you don't have one saying, did y'all really get that form? Just to double check. Applying through Member Access, it automatically preloads with your information and your spouse's information, and you can make changes if necessary. Please definitely hit Submit Application. I know we all get so excited, right? We're all excited. We're getting ready. You can print the copy if you want to, but click Submit because that is like transmitting/sending it to our office. So I know for me, sometimes I'm like, why didn't that person write back to my email? It's in the drafts. Or I thought I sent the text message, but I didn't hit send. So just make sure you click submit here. It's a very important step. When can we withdraw drop funds? Now remember, our first of the month check, our fruits, first of every month. Drop account, that's a different thing. These are our funds that we can access once we've officially retired. Within a year of our retirement date, we need to make a decision. How and when are we going to be taking these out? There is a minimum amount to be taken out according to the IRS life expectancy chart, which is just something to help you plan and make decisions, but it is a minimum that is used. And the withdrawals can only begin once you actually terminate employment. When are the drop withdrawals paid? Now remember, our first of the month check is exactly that, on the first of every month. If you choose monthly, and there are several options, but if you choose monthly, those are on the 15th of the month. So that's almost like a smaller second check or something. Keep that in mind, but that's after you've received your first retirement check. This is one of those things where there are a lot of questions about, and I can't see you, so I can't make any judgments based on how old I may think you are or not. And for most of our members, statistically speaking, this does not apply to them. But let me break this down so you'll see why. Because when we see, 55, I enter drop at 54. Let me break it down. Will you be or turn age 55 or older in the calendar year, not fiscal year, calendar year in which you retire? It doesn't say the calendar year in which you apply for drop. It doesn't say the calendar year in which you exit drop. Maybe you might keep working. So an early withdrawal penalty will not apply to you in many cases. For a couple of you listening, it may apply. Let me give you some examples. If I apply for drop at 50 years old and I exit drop at 53 and I work 2 more years to 55, I'm good. If I enter drop at 51 and I exit drop at 54 and I work a little longer, 55, I'm good. Let's say I enter drop and then I exit drop at 54 and I retire, but my birthday is October 28th. That's in the calendar year of which I retired. And if I turn 55 in that calendar year, I'm good to go. So for many of us, this particular withdrawal penalty age will not impact you. If you think it may impact you, please reach out to us at asktrsl.org. It will populate an email that will be sent to our office, and we can get you to the drop department that handles that a little bit more to see if that would impact you. For most of you, it will not impact you. Another thing you hear often about is, well, they have to keep it for at least 10 years. So it's a matter of which of the two options speaks to you. And this is for federal taxes. No matter what, you're going to pay federal taxes. If TRSL is paying your drop account to you, then you may not pay state taxes. But federal taxes, absolutely, you're going to be paying federal taxes. It's a matter of, do we pay our regular federal tax withholding for whatever our category is for our exemptions? Or are we paying a maximum amount, of which you might get some of that back, or you might owe a little bit more, okay? So it's one of the two sides. If the projected drop withdrawals do not exhaust the balance within 10 years, so let's say you want to spread it out over time. let's say share the love. You want to share the love in the drop account for a long time, then you're going to be paying your regular federal taxes. But if you go through your drop account, let's say YOLO, you only live once option, if you're going to go quickly through that drop account, if you're going to be taking out a lump sum and then closing the account, or a lump sum and then you're going to go monthly for a little while and then close the account, anything let's say big money, anything that makes it project that it would not last at least 10 years, we have to keep a mandatory federal tax withholding of 20%. Now, that's not a penalty like I talked about on the previous slide, which is a penalty, which one does not get back. But this is a 20% withholding. So one would file federal taxes. You may get a little bit of that back, or you may owe a little bit more. You may come out on one side or the other of it, okay? So that's something to talk with your tax professional about before you decide, what am I going to do with drop? Because there are many drop withdrawal options. The big ones to keep in mind, number one, you can't touch it until after you officially retire. Absolutely straight away, can't touch it until then. You can only change your amount, like increase your amount or change how you're receiving it once in a 12-month period. So you can go up the ladder, but you can't come back down. You can say, well, I'm receiving it monthly, but now I want to have it annually. And a year later, well, annually wasn't so good for me, so I'm going to do it monthly again. That's fine. Every year you can certainly do that. But once we climb up the ladder, we go, I want 1,000 a month. I want 2,000 a month. I want 3,000 a month. We can't say, whoa, I'm going to slow that train down. Let's get it back down to 1,000. We cannot do that. It cannot be decreased. At any point, however, let's say you start off taking it monthly or annually, at any point, you can do a total account balance withdrawal. Say it's my money and I want it now. Once we've officially retired, though, that's what's key. You can take a single sum amount at one point in time, just one time. If you need to take out another large amount, you would then have to close the account because you can only take out one partial single sum. Let's take a closer look. Each of these, we have examples for what we're talking about. Total account balance withdrawal, that's it's my money and I want it now. We want to keep in mind our mandatory 20% federal withholding tax on big money items, so to speak. And in some cases, that early withdrawal penalty might apply. Rollover, you absolutely can roll it over to another qualified plan in the US. Where are we not rolling it over to, Cliff? Rolling over the drop account, we can't roll it over to where? Anywhere outside the US. So no the cool foreign countries or whatever that people, no Swiss bank accounts or anything like that, can't do it. It's got to stay in the United States. When the withdrawals are made from a rollover, the funds are subject to federal and state. So you would be paying state taxes on a rollover, but you don't pay that until it's on the other side. So it rolls straight in. You don't pay on the way in. It's on the way once you start drawing on it. That's when you would be paying those federal and state taxes. There's a direct payment rollover split. Let's say you want to take some and roll some. Maybe you want to take some to pay off your house, to buy a car, something along those lines. And then you want to roll the rest of it. You certainly can do that. The same types of rollover rules apply. And on the direct payment, we're looking at that 20% mandatory federal withholding tax. A very popular option is monthly withdrawals. That's the minimum amount. The minimum that you must take is determined by an IRS life expectancy table. It helps you plan and make decisions. You can increase it once every 12 months, but you can never decrease it. Must be direct deposit, US banks only. And at any point you can say, I want to take the rest of it out. Annual withdrawals is going to be once a year. You can change the amount once every 12 months. Direct deposited, you specify the month. So maybe January, so you can pay off all that Christmas money, or maybe in April so that you can go ahead and get a head start on that summer vacation, or July, you can go ahead and get a head start on Christmas shopping, whatever you'd like to do. That is an option for you to consider, as is total account balance withdrawal. Maybe you might want to take a one-time amount out at the time of retirement, or maybe after you've retired for a little bit to buy a car and pay off your house, whatever you want to do. That's not our business. But talk to your tax professional to see what's best for you, because you can only take out a single sum withdrawal one time, just once. You have to already have started withdrawals, and you cannot increase the amount. Now, it might throw your amounts off because you're going to have to pay the 20% mandatory federal tax withholding on that withdrawal, that big money. It may throw off the rest of the account, and you'll need spousal consent if you're married. So you do want to double check with your accountant, your tax professional, et cetera, to see, because it will affect the lifetime of the account balance, and you want to take taxes into consideration. So let's see what 5 different people decided to do. Let's just say they all had a $100,000 drop account. We have one that wants to withdraw their amount to move abroad. Well, 100 turns to 80,000 once we have our 20% mandatory federal tax withholding taken. And again, you might get some of that back when you file for your taxes in the spring, in April. You might owe a little bit more. You might get some back. Don't know. Maybe you want to take some and roll some. You can, with this person withdrew 50, which turned into 40 to pay off the house because of 20%. And the other 50 rolled over straight away. Or you might go ahead and withdraw, this person's withdrawing 700 to 800 a month for a 10 or more year period to spread that out over time. Or maybe it might be 500 to 600 a month, or 600 to 700 a month in her case. This other gentleman is withdrawing $8,000 to $9,000 a year. I want to join his family because he's taking his family on vacation. So that's 8,000 to 9,000 per year, maybe 6 to 7 or 7 to 8, depending on his age at the time of retirement. And then our last little friend here said, well, I want to get a new car. So I'm going to take out 25,000 from that 100,000, and 25 turns to 20 after taxes, still gets a few $100s every month to spread it out over 10 or more years. I can't emphasize enough that you want to talk to your tax professional before doing this. We have had members in the past receive a withdrawal, close an account, roll everything over, receive a partial single sum and say, oh, wait, I didn't know that. Here, can you take this back? We can't take it back. So please talk to your tax professional to see what's best for your situation. Your situation might be different from your coworker situation, or your family member's situation, or your best friend's situation. So find out what is best for you and make the best decision you have to at the time that you need to make that decision. But please keep in mind the tax considerations, and you can talk more to us and more about your tax professional. We can't give you tax advice. We're certainly not financial advisors or tax professionals, but we can give you the information you need and estimates and such in order to make your decision. Tax liabilities, I think I've clarified, but it is subject to federal income tax always. But if the check is coming from TRSL, it is not subject to Louisiana state income tax. Now, that's not automatic. Of course, you're still going to pay state taxes. Your property taxes, your sales taxes, they're still going to tax you, but just not that particular amount. It must be claimed as an exemption when you file your Louisiana taxes. So on your, when you do your Louisiana tax, which reminds me I need to do mine, when you do your Louisiana taxes in May, you want to make sure to claim the exemption when you file those taxes, because the amount that you have, you're going to see this year. Take a look. This year, you'll see in that section where they ask you different questions, yes or no, and 46 times you say no, 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 no. Well, you're going to say yes one year. So take a look at that section before you fill out your taxes this year. You may say, oh, that's where I'm going to put that in next time. So in summary, you do not have to retire immediately after drop participation ends. It's not like drop participation, okay, you got to retire. Maybe you will. Many people do. Some people exit drop early. They retire within 3 years. It's completely up to them. If you work after drop, you're going to increase your future retirement check. That being our first of the month check, we have to receive our first retirement payment before we can access our drop funds. And depending on the withdrawal method chosen, you may face some tax consequences. So it is something to speak to your tax professional about. So I'm going to throw to Cliff in just a couple of minutes, but let's go ahead and get any of those questions that you have in that you need from us on things that you want to know and what to do now. Things to do now for drop members. Hopefully you've registered for member access. If you if you haven't, I would definitely encourage you to do so. Update important documents. You want to make sure that your address is correct, your name is correct, your email address, those types of things. Update your contact info as well. Get a retirement estimate. Earlier, I mentioned if you're working in drop, you can't, at this point, you can't do an estimate online. If you're not in drop, you absolutely can. But if you're working in drop, you can't do one just yet in our system, but submit a Form 10 to our office so we can take care of that for you. And if you have any questions for Social Security, you can go ahead and give them a call. If you've got an afternoon on your time, if you've got a whole afternoon or something, we've been hearing the things. Reach out to them at ssa.gov. They do not have questions yet about the whole GPO or WEP. We know that it went away, but we're just kind of waiting until the dust settles on that. But those of you on the line, you haven't retired yet, so that's good. So you're not looking for a reimbursement at this point in time just yet. Medicare questions, closer you get to 65, you want to make sure you reach out or even apply online. If you'd like to request an after drop benefit estimate, you'll pull up this Form 10 off of our website for an after drop estimate. Member Access has lots of functions, lots of bells and whistles. That's where you can update your name. If you're in drop, you can update that mailing address. That's for your security. You'll have to fill out a form to send into our office. View annual statements, apply for retirement or drop. And if you're in drop, we can view our drop account there. View our beneficiaries. You cannot change those once you've notarized that form and entered drop. Print income verification letter. You might need that at some point. And request Social Security verification letter. You may in the future need that at some point as well. There are lots of things you can find online at trasl.org, brochures, forms, webinars, and newsletters. And as a reminder, any questions you have after today, please head over to asktrasl.org. That's a website which will populate an email to send to our office for any questions that you may have in which we need to look you up. You can reach out to us for any questions that you have, and please subscribe on YouTube. This webinar has been recorded, so keep in mind that we're going to send out that link tomorrow. But before we go, he hates when I do this, but I have to. Okay, I have a list of them, but I'm only going to pick two. Y'all may know we do some dad jokes, right? You don't have to be a dad to tell dad jokes. And in case you can see my earrings, we know St. Patrick's Day is coming up. So these are very timely. Okay. What kind of bow can't be tied?
What, Jerry?
A rainbow. Yay. What kind of spells do leprechauns use?
I don't know. What?
Lucky Charms. And one last one. What do you get when you cross poison ivy with a 4-leaf clover?
What?
A rash of good luck. Anyway, thank you so much for your time today. Hope you enjoyed it, even if you didn't enjoy the jokes. I enjoy the jokes. He doesn't enjoy the jokes as much. He says that, but he's got his own dad jokes he likes to use. So let us know if you have any questions. Remember, we are here to help, and we will be sending the link to this webinar. So thank you so much for your time, everyone. Hope you're doing well. And look, the end of the week looks like it's going to be a bit rocky. So just make sure you stay dry, especially in the South. Y'all take care, friends. Have a good one. Bye-bye.